According to Reuters, 2025 global deal making has reached $2.6 trillion. That's the highest for the first 7 months of the year since 2021. That upward tick driven by some major mergers here in the United States, including Palo Alto and CyberArk, Google and Wiz, and Union Pacific and Norfolk Southern. But can this deal momentum continue, and who might be next? For that, we bring in Dan Primack. He is business editor at Axios. Dan, great to see you. It's been a while.
I know. Good to see you in the afternoon, Becky.
Yeah, it's nice to see you. So let's talk this through. There's a little bit of deal-making frenzy that's taking place. What's driving it?
A couple things. One is record high equity prices, right? A lot of these deals are all stock deals, so companies have more quasi-cash to play with. That's a big piece of it. The AI stuff is a big piece, too. Everybody is trying to figure out their AI strategy. Look, particularly on the tech side, through their stack, what don't they have? So, for example, Palo Alto and CyberArk, that's what that was, right? Palo Alto said, we don't really have identity as part of our solution. Let's get that. Let's go get CyberArk. It's also worth noting, though, like those three deals you put up, that $2.6 trillion, those are all announced deals. Some of those might either collapse or get blocked by regulators going forward.
Sure. That's a fair point, particularly if you look at the railroads and some of the other issues that are out there. What should we be watching, Dan, just in terms of what might be next? Because if it's the high stock prices that's fueling this, I mean, the activity you've seen, let's just say with Figment, with Circle, with any of these companies that have really taken off, you've got people when it comes to IPO saying we need to hurry up and get in there before this window closes. And I would guess it's the same with M&A.
It is. I mean, one thing to watch probably is what happens with the IPO market, right? Because a lot of companies, particularly these high-priced unicorns, which are, 10, 20, 30, 40, in some cases, $100 billion private valuation, do those start going public as opposed to getting acquired? Because one of the things that's driving that $2.6 trillion is private market transactions, big AI companies buying other AI companies for billions of dollars. You might see some of those companies start to go public. The other thing to watch is what happens to financial sponsors. Almost all of this, not all of this, but most of this has been driven by strategics, public companies buying other companies. The private equity firms haven't been terribly involved yet, but if President Trump does what he apparently is going to do, which is sign an executive order allowing retirement funds to invest in private equity, you could see private equity with this just huge influx of cash, at which point they might start buying.
Okay, are there sectors that are more ripe than others? Is it a continuation of the same sectors we've already seen?
I think it really is. I mean, so much of this is being driven on the tech side, right? Tech M&A, which really had been in the doldrums for the last couple of years, is the thing that's really driving it. As you saw, again, you do have the rail deal, you'll have some energy deals here or there, but this is tech, this is AI, and everything around that, right? So that could be data centers, which could be some stuff that you might categorize as construction, but it's really tech, essentially.